What's up, you dirt bags, degenerates, losers, portfolio blowers, and everybody in between? What do you get when big tech's about to report gold's mooning and Trump wants tariffs again? A market that's either euphoric or clinically insane at this point. I'm Max Pitts, and welcome to Trades and Gains, the only place where we say what your fund manager is too scared to admit. So, like we always do, let's kick things off with a quick little recap. The S&P 500 just crossed 6,300. Nasdaq's on a 6-day heater. Feels good, right? Cool. Now let's talk about how completely deranged this actually is. The S&P finished up 0.14% after a heavy sell-off going into market close. The Nasdaq, another record at 0.38% notched up, and the Dow is down, still taking Metamucil and trying to pee from this morning. Gold is up 1.5%. Yeah, that's not bullish. That's freaking flare gun run to safe havens. Translation, retail's partying, but smart money, they're buying gold and dark pooling defensives like we're about to replay 2008 with an AI overlay this time. Now, this week, by the way, under the hood, we had some spiciness. Google up 2.7%, leading the Mag 7 ahead of earnings. The AI hype is still hot. Open was up 42.67%. Full-blown meme mania. Retail traders have entered God mode. CLF up 12.45%. Trump tariffs might be bad for diplomacy, but they're great for domestic steel. And Tesla down 0.35%. Off slightly ahead of earnings. Musk versus Trump subplot adds bonus drama to this pointless report we're going to get this week. That really won't give you any insight. This week, however, is do or die for big tech. Tesla, Alphabet, Chipotle. The Mag 7 better show up like they're carrying the damn economy because, spoiler alert, they are. They shouldn't be, but they are. Google, again, they were up 2.7% today. Tesla was down slightly. Musk's prepping for a tariff Twitter war with Trump, apparently. And JP Morgan AI trades are 100th percentile crowded, as in stupidly overcrowded. If Alphabet or Tesla miss, this market's not pulling back. It's going to cliff dive faster than your last relationship. Now, another thing here is we have the tariff tinderbox. Trump's back with tariffs like it's his favorite mixtape. August 1st is the deadline. EU's threatening retaliation, and Commerce Secretary Lutnick calls it a hard stop. Translation, we're one tweet away from a trade war. Markets are shrugging like nothing's wrong. Oh, look, a new high. Well, you're going to want to get high after what happens to your portfolio if we do get into a trade war, you dirt bags. Now, real talk, if tariffs land, inflation spikes, the Fed cancels rate cuts, and this rally, it'll be vaporized faster than one of those disgusting flavored vapes that people smoke on a daily basis. Now, another thing, retail traders became completely unleashed like those girls gone wild videos you saw at 2 a.m. while you were watching Comedy Central or Cartoon Network. Open was up 42%. That is not a typo. It's up 188% in a week because, well, meme magic. Retail's in God mode again. DJT bought $2 billion in Bitcoin. Why? Who the hell knows? To be honest, we're not going to dig into that because I'd rather dig in my ass. Welcome to Meme Mania 2.0, where logic dies and momentum and volume rules. Sure, it's fun until it's not. Remember March 2021? So does your brokerage account and the fact that you may not have a Robinhood account either. Now, gold also decided to poke its head in. It's at 34.09, highest in 5 weeks. And no, it's not because people are bullish. It's because the smart money smells smoke. Fear is rising, the dollar's slipping, and someone somewhere is hedging the hell out of this market. When gold surges while stocks are at records, that's not confidence. That's paranoia in disguise. Now, let's go ahead and move over to our favorite options flow software, Investor Central Club, where if you don't have this data, we're currently running a promo where if you use the code July 2025, you can get 25% off your annual subscription here. Now, first things first, we're going to talk about our big money buys from today. Now we're talking about the biggest orders. We're not talking if these are multi-leg or whatever the case is. So you people in the comments who complain about that, why don't you go do your own research? This is just giving you the highlights. Don't come at me and get over yourself. First things first, we had SPY come in 625 calls. This was $12 million dropped at 3:56 p.m. And these are due for 731. So short dated conviction, $8 average, 628. This could be some delta hedging here because SPY moves pretty much dollar for dollar. So they'll make bank if SPY continues to run. NVDA, we saw 7.08 million going into 170 puts. Again, that's for the August 29th of 2025 expiration date, $8 average, bought at the 179.19 strike. That netted them 8.8K contracts against 3.1K in open interest. QQQ, we saw 565 puts for September 19th of 2025. 6.21 million dropped, 4,500 contracts with a $13.79 average against 4.33K in open interest. SPY, we saw some more calls come in, $600 calls. This is definitely a delta hedge. Look at that aggressiveness. ILMN was an interesting one as well. December 19th of 2025, 115 calls, $4 million dropped for 10,000 contracts on a $4 average. And that's 10,000 against 6.9K. Watch for that 10,000 to turn into open interest here shortly. We also had PDD come in with 3.7 million, $7.40 average, $120 strikes for November 21st of 2025, 4,999 contracts against 4.7K open interest. That's not too bad, and the IV is only at 39%, which is a safe amount. Now, talking about some of our unusual plays of the day, and they were unusual for that record. Again, we had Apple, November 21st, 2025, 180 puts, 2.32 million, 8,240 contracts at a 281 average. Again, we had 4.5K open interest on this. So look for that volume to turn into open interest here shortly, because this is where you would want to see if they were also selling puts as well. We only have 31% on the IV coin. We also saw some unusual in this $610 calls. Wowza. For March 20th of 2026. That was a $40 average though, so $4,000 per contract. So talk about some bullishness there. $2.2 million dropped on only 550 contracts against 10 open interest. Watch for that open interest or that volume to turn into open interest here shortly. On our dark pool side of things, it wasn't that exciting. As we can see, we did not have a ton of prints. I'm not even going to go over it if I'm being honest, because it's just not worth my time or yours. Now, when we talk about our flow scanner, we can see today was relatively low volume. SPY led the day, 42 million in overall flow, almost split 50-50 down the middle in puts into calls. NVIDIA, we had 9.9 million into calls with 15 million going into puts. QQQ, we had 22 million overall flow, 7 million going into calls against 14 million going into puts. IWM also bearish, 306K into calls against 12 million into puts. Tesla, 12.85 million total overall flow, 4.95 million into calls against 7.91 million into puts. It looks like there's some bearishness going into Tesla's earning report this week as well. So that's pretty much what our highlights are here. I stream this daily, so come hang out with us tomorrow as we have another earnings season day that we'll be covering. Now let's go ahead and make like a condom and wrap this up so you can go ahead and disappoint your wife or girlfriend tonight. So this market is drunk on AI, over leveraged on hype, and one earnings miss away from a panic attack. The takeaways here: big tech must beat and guide up. Anything less equals a rug pull here. And we've been seeing that all year, so I don't know why this is news to you. We go through the same thing every earnings season. I tell you guys the same shit, and you don't listen and get tanked. So continue not to listen to me and keep blowing your portfolios. Tariffs are a nuclear headline. The market is asleep, so don't be. Wake up on time, do some push-ups, go take a cold shower. Just be alert, be ready. Retail's back in YOLO mode. Great for volume, awful for timing, however. Whales are hedging hard. Dark pools whisper, brace yourselves. This isn't just frothy, it's dangerously complacent. This week, it could be legendary one way or the other. The week where you become a full-time trader or where you finally get that manager job at McDonald's. The choice is yours. Make some smart decisions out there. Drop your hottest take in the comments. Bullish, bearish, or fully in gold and waiting for the collapse? Like, subscribe, tag a friend still buying calls on open. I'm Max Pitts, and if the market crashes this week, don't say we didn't warn you. I'll see you in the next one for our daily market stream tomorrow.